Hi, this is Yeho. I'm Mark Option Trader. Today is February 12, 2026, 8:10 a.m. June time. Yesterday was National Foundation Day, so Japan has closed. Let's take a look at what's happening in Japan and the US. And the Nikkei closed on Tuesday at 57651 yen. Right now, futures are trading around 5818 yen. Prime Minister Takaichi won the general election in a landslide, and the ruling party secured a two-thirds majority in the lower house. Politically, that's a very strong base. On Tuesday, 2839 stocks advanced. That's two consecutive days of broad buying. Trading value was around 7 to 8 trillion yen. Yes, a price higher, so turnover naturally rise. But still, this is a very active market. The volatility index is at 35.77. There are clearly some investors who are cautious at these highs, but sometimes that caution actually strengthens the market. PL is 20.83. Estimated EPS is 2767 yen. That's strong. And the 30-year JGB yield is 3.47%. The election was fought under the theme of responsible proactive fiscal policy, and yet after the big win, the yen did not collapse. The yen is around 154.37. Many expected a sharp yen weakness. It did not happen. Markets often move opposite to expectations. I had been thinking we might enter a profit compression phase, but now I'm considering there's possibility that the rally extends instead. We need to hold both scenarios in mind and keep watching the model. In the US, the S&P is at 6941, not as strong as in Japan, but stability and grading high. Trading PL is 29.81. Forward PL is 22.37. The moving index is 61.34. No major change. Gold volatility in GBZ has eased to 29.38. Gold itself has recovered to around $5084. Bitcoin is at 67831. So, no dramatic shift there. It feels like the button is passing back from gold to equities. And within equities, Japan may be emerging as a leader. Back in October and November, I talked about Japan as number one scenario. I'd like to update the idea. The key is theirs. Test mining began in January at Minami Torishima, but this is not a sudden story. Theirs deposits were confirmed around 2011, and since then, technology development has continued. If we follow a 30-year cycle, mass production is in the 2030s makes sense. Look at the US share revolution. A share was identified in the 1919. Technology improved through the 2000s. Production scaled in the 2010s. The biggest political beneficiary was the first Trump administration. The US was built on technology and finance. Resources were added later. The resource base expanded policy flexibility. It supported aggressive fiscal policy. It helped fund AI and growth sectors. And Japan could follow a similar path, layoffs under the seabed and Hive 3 and other resources on the moon. That's why space policy matters. It's not just about the rocket. It's about future resource security. If Japan becomes a resource-backed economy, then proactive fiscal policy does not automatically mean currency collapse. The market may be slowly recognize this equity story. Japan PBR is around 1.7 to 1.8. The US trades at 3 to 4 times back. If Japan closes the gap, a Nikkei at 100,000 or even 110 and 1,000 points, is not unthinkable. 日経平均10万円 or 11万円. Yeah, of course. There will always be distortions in supply and demand. That's where opinions are coming. One more point on real estate. Given how high equities are, Japanese real estate may actually look relatively cheap. Yen price has risen, but there are signs of the consolidation. If global capital flow into Japan, Tokyo and major cities like Osaka could be related again. We could see another real estate investment cycle. Some developers currently trading the low PBR might even become growth stories. So, beyond the power and analogy, hard assets like real estate deserve close attention. That's it for today. Thank you to you tomorrow. See you.